SoFi stock has been on a very clear uptrend. It's up over 7% this week, up 21% over the past month. And for the first time in a long time, for the past couple of months, the stock closed up above the $9 range. This is significant. And yet, earlier this week, short interest numbers came in. Analysts updated their price targets, and both of those things suggest the stock has room to fall instead of rise. And in this video, I'm going to be covering SoFi related news this week and trying to make sense of this price action, especially as we head into Q3 earnings. Let's jump right into it. So, starting off with the stock price, SoFi, as I mentioned, has been on a tear recently. It's up over 7.5% over the past 5 days, about 20% in the past month, and it closed above that $9 range. And now, this is significant because when you talk about options trading, market makers want to keep the stock below key levels due to option expiries. As a result, many people were expecting this to close at $8.99, but it closed at $9.01, which shows real strength, and that's significant. And I think last Friday as well, it also closed above a key level. I think $8.50 was what it closed at last Friday. And so the stock is stair stepping upwards. And I want to talk about this more seriously because I think that this is a slow momentum shift that we're seeing in SoFi stock that is leading us into Q3 earnings. But I want to leave that conversation for the end of this video. And first, I want to cover some news this week. If you are new to the channel, subscribe for more SoFi related content. I do SoFi videos on a weekly basis talking about the news. So speaking of, let's start with the news. On Monday, SoFi lowered their APY from 4.5 to 4.3%. And I mentioned in a tweet that this was going to happen, right? As the rates come down, all financial institutions, especially those with partner banks, but also institutions like SoFi that have a bank charter, they're all slowly going to start lowering their APY. The idea with SoFi and why this is somewhat surprising is because we thought that SoFi was going to be higher for longer from an APY perspective because they have that vertical integration that allows them to keep their rates up higher. But one of the things that we learned from the Goldman Sachs conference was that Anthony Noto mentioned that, they're testing out lowering their rates to check out the elasticity of their clients to basically determine whether their clients are sticky without the rates being as high, in which case SoFi can earn more money, or whether they need to keep their rates at the top of the market for that same customer. And 4.3%, I think, is still fairly competitive because everybody is lowering their rates. I even made a post on X earlier today that Apple lowered their APY again. And this is the APY for the Apple Card, which Apple initially lowered in April of 2024 from 4.5 to 4.4%. And then at the end of September, they lowered it to 4.25%. And just 2 weeks after that, they lowered it again earlier today to 4.1%. And so SoFi at 4.3%, I think, does have some type of competitive advantage. Of course, it's not the highest ever in the market, but it's still on the top end of what the APYs are. And we expect it to be at least slower in lowering those rates, but definitely not that same higher for longer narrative that we had initially thought. Now, on Tuesday, Compass Point came out and they reiterated their $4 price target on SoFi. And I found that to be really interesting, right? Because we are in this momentum shift. We are approaching 4 quarters of profitability. And yet these analysts still come out and they reiterate these $4 price targets, which the more the stock price climbs, the more crazy these low price targets are going to seem because they're so disconnected from where the stock is in reality. In reality, the more the stock price climbs, the more the sentiment climbs, and the more analysts are going to be chasing that stock price, whether it goes up or whether it goes down, which is why that $4 price target really surprised me. Moving on Wednesday, we saw SoFi officially launch their 2 new credit cards. And also on Thursday, these new credit cards were live on SoFi's website. So we know what these credit cards are because SoFi essentially mentioned them at the previous earnings call. They announced these programs. And at the Goldman Sachs conference, they also said that they're still in testing with these programs and they're being very selective about who they're testing these programs to. And the credit cards in question, just looking at the PR here, is the SoFi Everyday Cash Rewards Card and the SoFi Essentials credit card. And both of these cards are designed for different cohorts within that SoFi ecosystem. The Everyday Cash Reward credit card is designed for people who prioritize earning rewards for their daily spending, whether it's dining out, where they get 3% unlimited cash back on restaurants and on food delivery services. They get 2% unlimited cash back on grocery stores and convenience stores, and they get 1% unlimited cash back on other eligible purchases. By contrast, the SoFi Essentials credit card is a reliable credit line for those people focused on building or improving their credit score. So basically, this is SoFi's commitment to help these people get their money right. It's designed for people to build credit in a sustainable way. And now both of these cards, they don't really have any fees. And so I think they're fairly competitive if you're talking about cards that are not premium top of the line cards that have annual fees, right? These are free cards that offer percentage cashback. And so this is positive because SoFi has mentioned in the past that they want to be focusing on credit cards as a growth driver for them in the future. Credit cards is currently a money loser for them. And so they want to be fixing that because there's a lot of money in credit cards, but they want to be very conservative in how they roll these credit cards out. Because number one, SoFi is conservative in how they roll out every product. But number two, with these credit cards specifically, because they are so catered, they want to continue that process of continuously iterating and testing these cards out. And so I imagine a very slow rollout to these credit cards with small cohorts to start until they eventually expand and expand. And if you go to the website, you'll basically see a similar messaging where they're essentially being very, very catered on who they offer these credit cards to start with. And then after seeing the first initial positive results, they're probably going to expand that net out further. On Thursday, I also saw this post around Helocs picking up and just a nod to the home loan segment that SoFi is going to receive a tailwind from. As rates come down, home loan demand is going to be rising. And SoFi, especially now that they purchased Wyndham, is going to be benefiting off of that increased demand. And so that's something that's really a 2025 catalyst, but we're going to see a lot more news pick up around that specifically. But the main topic of this video that I want to touch on is related to the stock specifically. On Friday, we got updated short interest numbers. The updated short interest numbers as of the end of September is 181 million shares sold short, or about 17% of the float. And the interesting thing that I found here is that from the September 13th filing to the September 30th filing, short interest number has fallen slightly, but it's still 17% short interest. It's very, very shorted stock. And I suspect that this number will have fallen even further because keep in mind, it's currently Friday, October 11th, and we're looking at numbers that are 2 weeks ago, right, from September 30th. And so when the October 15th filing comes out, I suspect that the short interest will be much lower than the 181 million shares sold short. Why? Because the stock is up like 22% in the past month. And so as the stock goes up, then shorts are backed into a wall where they're feeling the pressure and they're either going to be closing out their shorts, in which case this number falls, or they're going to be doubling down and betting on the stock falling back again, in which case they would be profiting off of those shorts again. My bet is that this is going to be a more sustained run, that this is a momentum shift that's happening in SoFi stock. And as a result of that, what we're going to see over the next couple of weeks as we get the October 15th filing for short interest is that 181 million shares sold short number is going to start falling and not rising. But that remains to be seen. We are still at very elevated numbers. So as we have more volatile moves, as SoFi closes weeks above those key levels, that's all going to be significant from a short interest perspective. So that's a really interesting narrative here that's forming. And it's interesting because, so on a technical pattern, I saw this post from Chris that SoFi had formed a golden cross, which is a very bullish technical pattern. And the reason why it's bullish is because when you take it into the context of everything else that's happening with SoFi, we're at a really interesting time here. Earnings is about 2 weeks away. It's on the 29th on Tuesday, so about 18 days away. And SoFi has been on an uptrend over the past month. We're heading into this quarter, which is going to lock in a full 4 quarters of profitability for the company. As you can imagine, that on a trailing 12-month basis is going to lead to all of these analysts re-looking at this stock. Is going to lead to a lot of retail re-looking at the stock, probably going to show up on more scanners when you're looking at profitable companies, because if you look back 4 quarters, SoFi is going to appear profitable on a trailing 12-month basis. And so really for this company, as they continuously execute on a fundamental basis, it's going to get better and better and better. And the bear cases are going to be further deconstructed. And it's going to come to a tipping point where that short interest does not correspond with this execution of this underlying company. And that's obviously going to be felt in the stock price with a violent move. And the fact that we're seeing this gradual increase upwards for a sustained period of time, I think that now the question becomes, will we see a sustained move to a new level? In other words, will SoFi break into the double digits and stay there? In the past, it's broken into the double digits multiple times this year, but it's not been able to hold those gains because there's a lot of selling and there's psychological pressure that goes on because the moment that it breaks in double digits, all of retail is going to be selling their stock, is going to be dumping. I'm seeing a lot of posts like that on X where people are saying, like, I can't wait until the stock goes to $10 so I could just dump my shares. Well, that becomes a self-fulfilling prophecy because the more people dump their shares, then the more the stock falls and the more it reinforces that pattern of the stock trading in a channel. But if the fundamentals are strong and if the trailing 12 month looks profitable and if the company is executing on new product offerings like these credit cards and we break into double digits and we're able to hold double digits, then what you have is you have price discovery. People look at SoFi because it shows up on their scanners because the stock, breaks $11.70 and shows up as a 52-week high. And people are like, oh, wait a minute, I haven't seen SoFi in 2 years. Let me take a look at this stock. Let me see what's going on. And price discovery brings more momentum. And what happens as the price goes up, sentiment also goes up. Analysts adjust their price targets upwards. And so you have this virtuous cycle for SoFi to have a clear path to a revaluation by the market because it's broken that key level, which means that all eyes are on this key level for SoFi to break. Third quarter earnings is going to come in. SoFi is going to triple beat if they offer good guidance, if the macro is supportive. And if that pop is sustained, especially as more institutions plow into the stock, then that's going to lead to price discovery. That's going to lead to analysts re-rating the stock upwards. That's going to lead to more FOMO, more people buying into the stock, and it's going to lead to a much higher stock performance. And this is what leads me to believe that this is a sustained move upwards, that this is a momentum shift because we are going into this massive catalyst for SoFi, which is those 4 quarters of profitability. And that really is going to lead to a re-rating of the stock. At least that's the bullish take. You could also have the counter argument, which is the bearish take, to say, well, SoFi could report earnings, the stock is going to pop, and then the stock is going to drop again to the $7 range. And that's further going to reinforce that channel trading. And that's further going to add more resistance to that double digit break. Because right now we've had this multi-year resistance on those levels. And the moment you break through that multi-year resistance, then good things will follow with the stock. There's been multiple reasons why SoFi has not performed this year. I still think that the stock is going to close the year into double digits, especially if we have a strong macro that supports the entire market going up, especially if we have further rate cuts from the Fed, and especially if Q3 comes in as a gangbusters quarter, if we have trailing 12 months of profitability. There's a lot of good things that are tailwinds for this business even before we head into 2025. We know that 2025 is really going to be what we had hoped 2024 was going to be for SoFi, but we didn't get that for 2024. I think Roy summarized it here well in a post. Basically the lending platform was weaker than expected. The macro environment was weaker than expected. We thought there were going to be more rate cuts in 2024 than there actually ended up being. And all of those things got kicked back to 2025. And so when you put all of these things together from a technical pattern perspective, from an analyst perspective, from a fundamental stock perspective, I think there's a lot of things to love in the setup for SoFi right now, personally. And really all eyes from the market go to Q3 earnings and that resistance band. And when it breaks past that resistance band, if it can prove that it can actually hold that level, you're going to see really good things for SoFi. But in terms of the news, we're seeing for several weeks now a sustained, consistent move upward. Every single week, it's stair-stepping upward. And I think that's a really good trend. And we're going to see if this trend continues as we go into earnings. There's only 2 weeks left into earnings. We'll see what happens. I hope you enjoyed this video. I hope you enjoyed these raw thoughts. If you did, please subscribe to the channel and let me know your thoughts in the comments below. Thanks so much for watching, and I'll see you in the next video.